What's going on, guys? It's your favorite mortgage lender, Del Kwame. Got mortgages. Happy Monday. And man, oh man, what a crazy last couple days has it been, not just in our world for mortgages, but obviously in the stock market. Talk about people literally wiping out um, trillions of dollars of really stocks and benefits. We had actually a deal, unfortunately, that died because a client lost well over close to $600,000 as we were basically doing an asset depletion loan. So much to cover about all the various different data readings that we have. Uh, Last week was the employment data week. We got updates from the job opening and labor turnovers, which came in below expectations. And then we had the ADP report, which actually showed an uptick on the private payroll side. And then we saw also a little bit of really slight decline in regards to the I believe it was the BLS report, actually came in hotter than expectations. But holy crap, did tariffs really steal the show on Thursday and Friday? I mean, mortgage-backed securities skyrocketed. Luckily, we were a little tactical. We held off on a few clients. We locked a few clients, to be frank, in advance. So, about two or three clients kind of missed that train. But thank God those couple clients we actually did lock them, because the market today was probably one of the worst that I've seen in a little while. And it was truly mainly just because of the just the transition of how interest rates obviously transpired and changed over the course of it's crazy in less than 2-3 days how quickly the market can truly shift in a matter of basically seconds, to be honest. But we're going to dive deep again, kind of a quick expectation in regards to obviously the tariffs. We know as of last Thursday, tariffs went still 34%. And then we actually got, as expected, retaliatory tariffs that actually came in. So we're going to kind of see exactly what ended up happening. So as we look into, of course, President Trump announced that there was going to be that 10% baseline tariffs on the imports. Now, I had shot quite a few videos really talking even further about this stuff. But remember, the tariffs are taxes on imported goods. What's the whole reason behind this? Again, President Trump's whole focus is to obviously start making the people look to purchase domestically rather than going and seeking outside purchases where it's usually a little bit cheaper. Again, so in short, what ended up happening, and we'll take a look at mortgage-backed securities and the interest rates, but since that happened, interest rates obviously dipped, and as you could see, we literally reversed all the course over the last day with all this stuff, right? Now, we did see, going back to the labor market at the start of our call, we looked very deeply into where employment numbers changed, and we can kind of see a huge uptick. Now, we know here was a little bit of factors with some government layoffs and stuff like that. There were some revisions of $48,000. Unemployment rate, as you could see, actually ticked up to 4.2%. Now, a little bit of a surprise, truly, right? But the good thing is that the unemployment rate, well, it's unfortunate that people are losing their job, but the good thing is, as to what we necessarily want, to see a little bit of that uncertainty, because we know that the Fed has that dual mandate of both inflation and employment. Okay. Now, a couple of different things also for us to look at. We did see, like I had mentioned, ADP report that came out on Wednesday. Private payroll that also showed a little bit of an uptick of about 155,000 jobs, were really this, couple different, both medium, small, and large size employees. Annual pay increase jumping up 6.5%. And then job stayers obviously jumping up 4.6%. One of the big contributing factors, again, despite this uncertainty, is just the March employment numbers were fairly well. Like I said, job opening and labor turnovers, also known as the JOLT reports, dropped to 7.6 million, obviously coming right under expectations. Hiring rate actually also went to 3.4, and a quit rate of 2%, meaning people are basically scared to essentially quit their jobs if they were to potentially get let go, because they just don't know the obviously risk of the outside market. And then we also saw continuing jobless claims actually ticked up to 1.9 million, meaning not only are people afraid to basically quit, the people who do necessarily let go are also at an all-time high, and they're continuing to ask for unemployment claims throughout. Okay. So now we will also see again what to look for. This week is going to be the inflation data week. We're going to get updates on CPI, producer price index, wholesale minutes, and really all the various aspects that affect the market. So as we can kind of see here, like I had mentioned, how interest rates have transpired. We basically erased all the positive movement that we did, and we're kind of back to where we were pretty much at the end of last month when it comes to interest rates. And let me tell you, I don't think we're going to see any changes from here until then. If you guys can kind of see here how mortgage backed securities are doing, not so well, right? Pretty much all the gains that we necessarily had from this entire portion is pretty much gone, right? We had really wiped out everything that were kind of back to mortgage backed securities, as I had mentioned, where they were kind of towards the end of the month of last month. And we could see here again a couple different comments when we take a look at some of the Fed chairs expectations on CPI. Again, consumer price index. We will get those readings on Wednesday. Showed again headline inflation should come in at about 1%. They are expecting that inflation should drop from 2.8 to 2.5, which is a good thing. Remember, we're replacing a past data reading of 0.35 in the prior year. It's 12-month lag. So again, that move towards lower inflation obviously should actually be good for the bond market. But let me tell you, I mean, this crazy seesaw of the market and just the transition, could potentially also shift. We will get the Fed minutes meetings from the prior Fed meeting. That also usually has some potential impact on the market. Again, CPI, I misspoke. I said Wednesday. It comes out on Thursday. And then Friday, we'll get the producer price index. Okay. So a lot of different things going on. Let's kind of see how the stock market also simultaneously ended today. We could see obviously a little bit of extreme volatility. Also swung a little bit, but you know, it's pretty unfortunate to see some of the stocks obviously take a massive hit. I mean, over the course of the last few days. Let's see how the market opens up again with mortgage-backed securities. Obviously, doing Nvidia obviously came up. Lucid, Planter, a lot of different positive greens, right? Then let me tell you, it was not like that. There's also some potential impacts in regards to the European Union, some of the things that they're doing there. So, of course, I'll keep you guys updated as we continue seeing some of the different changes and market tribulations, and then we'll take it from there. If you guys have any questions, make sure you guys visit our website, gonmortgages.com. Talk to you guys soon.